Hello, welcome back to Move Ahead with Dalia. I'm your host, Dalia Cahigas. And on today's show, we are talking about financial planning with Angie Williams, a senior wealth advisor at Wealthquest. Hi, Angie.
Hi.
How are you?
Very good. Very
Thank you
glad to
so
be
much
here.
for being here.
Yes.
I want to ask you, before we get into a lot of the information about Wealthquest and the financial planning work you do, I want to ask you, what is the age where someone should meet with a financial planner?
Yeah, that's a good question. I think people feel like they have to have a ton of money before they sit down with a financial planner. And quite frankly, the way you get a ton of money is to sit down with a financial planner. So I think anyone who you're starting to save, you start contributing to a work 401k. Especially if you have another savings account. There are tools you can use, I'd say when you're younger, even in your 20s, to get started.
Okay.
So right now, a lot of that, if you look up some kind of online advisor or like a very brief session where you can schedule an hour with someone to talk, I think that's good really when you get your first job, when you have that 401k that you can use.
Okay.
You can ask somebody, should I do traditional or Roth? And, how much should I be saving out of my salary? That's usually a really good time to just make sure you're getting on the right track, kind of on the right rails there.
Right.
So as you save money, you're confident that you're doing it in the right place.
Okay, that's great. Great information. So let's talk a little bit about the Wealthquest organization and what you do there.
Yeah. So I'm like you said, a senior wealth advisor and financial planner with Wealthquest. And I was familiar with Wealthquest before I started working there. It's a model that I really believe in. The easiest way to describe it is a one-stop shop, right?
Okay.
So it's somebody who can advise on your investments and taxes and insurance and all these things.
Okay.
And so it's nice, again, to have, we're primarily a team of planners that kind of help everybody pull things together. So I work with a planning team and an investment team and, a tax team so that when clients ask me questions, I have someone that I can go to. I don't have to know everything. And there's kind of a depth of knowledge there that we help clients with.
Okay, great. Can you share a little bit about your background and how you got to Wealthquest?
Yeah, it was a little bit of a twisty turn. I started out planning to go into healthcare and be in medicine and that type of route, and had to kind of pivot. And so as I was looking for opportunities or different things to do, I ended up out of the blue applying for a job at a futures trading firm.
Okay.
And my goal there was just to kind of do something where there was licensure involved. It kind of lifts you out of like the general pool of people trying to find jobs in general. Okay. I'm like, I'm going to do something that requires a license, get a license, and kind of go from there. And it was really that that broad. Yes, that was the strategy.
Okay.
And so I started working with futures, which are contracts where you can buy, if you've seen like corn and hogs and oil and that type of thing. I had no idea what a futures contract was. And quite frankly, I think the only reason they hired me was because they thought I was smart enough to pass the test, because it's like a time test with math involved. And I think they just looked at all my academia and was like, she can probably pass the test. And that was it. They didn't know much about me and I didn't know much about them. So I ended up, that was kind of a very trading, right? These people are doing trades and hedging in a very kind of active trading environment. And what I started to realize there was just these are very short-term transactions. If someone does have futures in a portfolio, it's not that common. It's a very small portion. And I just wanted to be kind of broaden my horizon and really work with more people. So from there, I got a Series 7, which is a stock license and learning about stocks. And again, I moved out of the trading environment and I worked at, a branch for a brokerage firm for a while. And that's when I really started seeing people ask questions that, maybe you are making money in a portfolio and that's great. You had a trade that worked out or a long-term investment, but, what do I do with this money? Right? I made $1. Where do I put it?
Right.
And so that's when I really started getting interested in financial planning and took my courses to become a certified financial planner. And that's kind of what led me here to Wealthquest. So it was just this broadening of scope over time where, we focus so much on the investments, but really it's that plan. What are you doing with the money? How are you going to use it? Is it tax efficient? All of those things that really make a difference in people's lives. And so that's kind of how I ended up here.
Good. Wow. That's really interesting. I know you do a wonderful job because you are my financial advisor. Yes. So thank you for all your help.
Yes.
So the main reason I felt that it would be great to have you on the podcast is because I wanted to have someone who knows what they're doing in the financial planning realm, but also to kind of give listeners some basic information about financial planning, because I didn't know anything about it, and I waited quite a long time. Yes, I regret it.
Yeah.
I waited quite a long time to actually just call you and say, "Hey, can you help me?"
Yeah.
I should have done this 20 years ago.
Yeah.
But here we are. And I know if I would have started earlier, I would have a better outcome when I retire in the future. So I wanted to make sure that we brought to the listeners some like basic information to help them understand what it is that you do, how you help people. So can you explain a little bit more how you help people? Like when someone contacts you and says, I think I want you to help me with my retirement portfolio or investing, what it is that they need to bring to you so that you can get them on that path.
Yeah, and that's usually what it is. Something usually triggers questions that people kind of finally feel like they have to ask somebody. Quite often retirement, that's the number one. It can be college, it can be an inheritance, but something that happened that, they feel like they need to talk to somebody. And so I think that I always try to just figure out where people are at, what do you have and what have you been doing? And that's kind of the first step. So that's statements and, where your money is located in accounts. And then what's available to you, right? Like what type of options do you have through work, and what type of options do you have where you're currently invested or at the bank, right? And really comparing those things to suss out where we're going to go with this.
Okay.
And so I think that's really just kind of getting the lay of the land. So things that show what you have and where you're at so that we can figure out kind of that path forward.
Okay. Wonderful.
Yeah.
So one question that I didn't know before I met you, and I'd love for you to explain it in layman terms, is what is a diversified portfolio? I know we're kind of jumping here, but this is something that I people hear all the time.
Yes.
And for me, I didn't understand it.
Yeah. So the first thing I'll say is you hear it all the time because it's tried and true. And while most of the news that you hear on TV is about individual stocks, this one stock went crazy, or had you invested, 30 days ago sometimes in this stock, you would have made X. And that's fine, but that's speculation. That's not investment. Your investing should be honestly pretty boring. It should be a very disciplined process where you're putting money away at regular intervals into some things that make an average of, 5 to 8% each year over time. And that's how you get to that goal, is with a diversified portfolio. So this just means that it's kind of the old, don't put all your eggs in one basket, right? It means that you're going to have some U.S. stocks of different size companies, large companies, small companies, some international. It means you're going to have some bond exposure in there. And so we're really doing kind of a mixed bag. And what you'll find is that each of these categories do different each year. The winner last year is not going to be the winner next year, and so on and so forth. And it takes that pressure off of picking, quote unquote, the winner, right, and relying on that. So what you'll see is these things will, these different asset classes will all have different returns. from the top winner to the bottom kind of dog of the year. And your portfolio will be somewhere in the middle. And that's what you want. You just kind of want to ride that middle wave where you're consistently making money over time. When we have a rough year, like last year where the market was down, it's down. It just is what it is. But if you're in a broadly diversified portfolio, when that market comes up, you come up with it. And that's what you want. You're not making any kind of hard bets on anything.
Okay. Yeah, that's very helpful.
Yes.
It is challenging to understand unless you're in the business or you're following it regularly.
Yeah.
And I feel like I don't have time. That's why financial advisors are so important, right?
Right.
We are living our lives. We're planning vacations. We're planning college. We're planning even, whether it's helping elderly parents. There's a lot
absolutely.
involved in our lives. And that's why it's important to have the professional there to guide you, advise you, and just keep you up to date on that. Because I don't want another job.
Yeah. And I think that, a lot of people have this notion that a financial planner or an advisor is, again, very investment based. We're going to beat the market or get you this big return. And quite frankly, you don't need that. You've probably heard these examples. If you start at 25 years old, putting $100 away, in a month in an S&P fund, you can retire a millionaire. And that's just money compounding and discipline. You're putting away your money every month. What an advisor really adds is those things that you are hesitant to do, you don't want to do, or you're just too busy to do. I mean, how many people have cash laying around that could have been working for years? How many people could have been starting different accounts like a Roth IRA in addition to your 401k? Advisor really helps you do these type of planning things to add these elements that over time are going to help you make those returns that you need and help you with those planning type issues. That's really a good advisor, what they do. They're not showing you charts and graphs of something that did great 5 years ago and who knows what it will do moving forward.
Yeah. And when you said that, I thought about my personal experience because Pete and I have our Roth IRAs and our conversations go back and forth. Well, should we put it in this year? Should we put it in? And then we just call Angie and Angie's like, yes. And this is very important because we are going to second guess ourselves about our money.
Exactly.
That's, again, why it's so important to have that backup person that knows what they're doing and saying be consistent, right?
Yes, absolutely. I mean, it's kind of counterintuitive. A lot of times people don't want to invest when the market is down, but honestly, that's sometimes the best time to, you don't want to, buy at all-time highs. You want to buy at some lows, especially with a long-term plan. And that's, again, why you're approaching this not as a trader or an in and out person. You're looking at the next 10, 20, 30 years. You won't even be able to find the blip in the market from today 20 years ago, honestly.
You're not going to remember
no, you're not.
The bad year we had last year, next year, or the end of this year.
Exactly. And we all do this in our 401ks, right? You get your paycheck, they take the money out. You never don't put this weekend, the market's bad. We don't do that. We just, right? And that's why it's such a successful strategy because you up and down over time, that price is going to average out. Sometimes you're paying a little bit more for stocks, sometimes a little bit less. And again, it's that middle range that we're aiming for. But somehow when you have to take money out of your bank and push it into the market when all you see is red graphs for the whole week, right? Nobody wants to ever do that. And again, you're exactly right. That's the value of an advisor that says, no, stay on track, put this in, and then, may have some ideas for you of where to put it or things that might make it a little bit easier.
Yes, absolutely. So that brings me to the book you gave me that you sent over to us last year that I finally read earlier this year.
Good.
It's called Simple Wealth, Inevitable Wealth with the author is Nick Murray. And this book is not this book, but the original was written over 20 years ago and is true today to that whole investment and financial planning right?
Exactly.
One of the interesting parts of the book that I enjoyed was a chapter called Behaving Your Way to Wealth. And he says wealth isn't driven by investment performance, but by investment behavior. And that rang true to me because that's very similar to real estate investing.
Okay.
Right? Because, we feel like if you buy a property and you're buying a home because you're going to live in the home, right? And you need a place to live.
Right.
And if you stay there for 20 years, well, chances are you've built equity in the home, right? Versus renting. And his part about the behavior is so important when you buy something and you hold it. If you hold it, you have to deal, if you have tenants, you have to deal with tenants and you have to deal with the behavior, right? Yeah. And the challenges of owning it. But if you keep it in the long term, just like investing in stocks.
That's right.
You will build that wealth. So I really loved a lot of the simple things he explained here. Yeah. And I'm going to read it again.
Yeah.
Because that's how my brain works. I have to read things twice. But yeah, thank you for giving me that book. It really did help me understand it. Good. And now I explain it to Pete.
Good.
Like, we have to hold and calm down. Don't worry about the bad news on, in the media.
Right, because that will never end, right? There's always a reason not to invest each year because there's always something going on in the world. Yeah. But that's why the book is so timeless, because it really is. I like to just really stress this, that, building wealth over time is that discipline. Yes. And time. Yeah. And you keep those two things and it does work out. And that advice still stands because that's, it's just a basic tenet of investing.
Absolutely. So when you are going to meet with a client, what are some of the typical questions that you get from your clients? One of them, I'm sure, is fees, right? But also, I'd love for you to explain the fiduciary and the broker relationships here.
Yeah. So I think, and that kind of ties into the fees, because we are a fee-only advisor. And what that means is that the only person who pays me is the client. I charge a fee for the assets that I'm managing, and that fee is paid by the client. Now, there's many different kind of fee setups, but I do find this to be the most fair. And this is because I'm not paid on commissions. So if your account is trading, I'm not participating in that. And I'm not paid on products. So I'm not selling you anything where I make a kind of tidy sum and maybe influence to, sell you something.
To sell it, right.
This way, the firm really can go out and look for what are the best investments out there. Where should we be invested if we want this type of, asset or this type of category in the portfolio, and there's no conflict of interest there. Okay. So I think when you start looking for an advisor, fee only is important. Okay. And I think a fiduciary standard is also important. And what that means is that legally I have to do what's right for you as the client. I have to put you first and do what's right for you in your financial situation. And believe it or not, not every advisor has a fiduciary role or responsibility. That's something that you willingly take on as an advisor. So we are fee only and fiduciary. So a great question to ask when you're starting to look for an advisor is, how are you paid? Are you fee only? Are you a fiduciary is a great one. And, maybe there's something that prohibits that, if you can imagine someone working for a big bank where they do sell products or, other things may have those type of conflicts of interest, but at least they can tell you, and they can disclose it. And you can, it doesn't mean that they're a terrible person, but at least ahead of time, what those limitations are. Okay. And so, the fee definitely comes up. And I really always stress that we're acting as fiduciaries, we're doing what's in your best case scenario. And fees, a lot of people are very apprehensive to pay a fee to get help. But like I said, if you are getting help with planning and how to position yourself and someone helping you look into the future of where you'll be, I mean, we just don't learn personal financial planning in school.
That's
you
right.
know, we don't know anything. So at least some help along the way. Like I said, you can hire planners just for an hourly rate where, you know, you'll still manage your own money, but, you know, they will give you some advice. You know, find something that's comfortable with you, but you are always paying one way or another.
Yes.
You're either paying somebody for advice, or you're not getting advice and you're paying by the opportunities that you're losing or the things that you just don't know. But there's always, you know, you have to pay to buy a fund online. You have to pay, you know, there are fees involved. You just want to make sure that they're reasonable.
Okay.
Yeah. I think another question is people, how often will I hear from you, or how often will we work together? And so my pace is twice a year to kind of reach out and say, hey, we should get together for a review. Some people want a quarterly call, some people once a year, you know, and they're fine with that. But I think that is something else to finally, in the beginning, people want to talk a lot more. And then as things go on and they're, you know, kind of on a smooth path and we know what we're doing, that may come down. But just kind of that level of contact of, will I hear from you? Nobody wants to be forgotten or feel forgotten.
Yeah.
So I think that's another common question.
Yeah. So Pete will call you when the market crashes.
Yes.
I'm kidding. He comes home and he says, did you see what happened in the market? And I'm like, no, I didn't watch the news. I'm sure it'll be okay.
Yeah. And that's honestly, the clients who do the best are the ones that they check in on things periodically. I'm not saying never look at it. You have to look at it.
Yeah.
But in general, kind of let it ride and kind of let things play out. Yeah.
Okay. Yeah, that's really important. I feel like we, as we've been in your hands, so to speak, as your clients, things have calmed down in our mind. Our doubts have eased. And that's another reason why it's important to have a financial planner. It's just we're constantly thinking about, inflation and how expensive everything is, and the news is, just blurting out the worst of the worst. So it's just better to just speak with the professional.
Yeah. And I think too, when you're actually doing things, when you know what you're doing, you say, well, I'm saving this much and this is my goal and this is what I'm doing. You feel a lot more empowered than not knowing what you're doing. And, those news stories and the market can really get to you when you don't feel like you're handling things.
Yeah.
But when you're actively saving and participating in your kind of financial plan, that makes you feel a lot better about it, and it makes a lot of these other things that can go on a little bit more bearable.
Yeah, that we can't control. Things that are happening that we can't control.
That's right.
Yeah.
That's right.
That's what I keep telling myself.
And I have like a very bare bones way of looking at it too. Is like you have stocks, bonds, and cash. I mean, we don't have a ton of choices. Real estate, right? And so you don't have 10 categories that you can go. For a long time, our cash wasn't paying us anything, right? I mean, we have better rates now, but that's only because we have high inflation. So, right, that goes hand in hand.
Yes.
Then you have bonds and you have stock. And especially in the book, you'll notice he's a big advocate of holding a stock-heavy portfolio because it can keep up with inflation and growth over time. And so, there's no perfect solution like most things in life, but that's kind of your categories. You just have to kind of go with them and look at the long-term results and not the 1 year, 2 year, type things. Stock results start really being meaningful, at least, 5 year, 10-year numbers is when you can, you see where you're really at.
Yeah. So again, it's about thinking in long term, right? We're not going to worry about what is happening with the stock market every week, looking at it every week. I mean, I know I won't be able to do that anyway.
Right.
But just to follow what the advice of the financial planner, be consistent with putting in the funds to help improve your chances of having wealth in retirement. What other things would you say are part of the steps for when you're meeting with your client? I mean, I'm sure you sit down and you go through their goals, like you mentioned earlier. You're going to break down like well, here's what you're earning, right? Here's what you've saved, and you have 15 years before you retire, and here are the numbers based on how much you will, if you can save this much in your investments, this is potentially what you could end up with when you retire at 62 or 65. By the way, what is the retirement age? Because I feel like that's always changing.
Well, that's different for everybody. The earliest you can take Social Security is 62, so that kind of opens the door.
Okay.
But quite often we recommend people work a little bit past that, right? So you're not getting less than your full retirement benefit. We really want that full Social Security benefit that you've worked so long for. But yeah, I think so. It's kind of this lay of the land, and then just being very realistic about what next steps you can take. It's really is the discipline that you're doing the same thing over time is the most important. I think, again, you can be really ambitious about saving. Okay, I'm going to put, as much as I can, or every spare cent in that I have after I pay my bills. And then what happens is you have to start pulling out, right? Because you didn't really have that extra money to invest. So I think that lay of the land is that first step. And then second, being very practical about what can really be put away, not touched again, right? So this means you have a few thousand at least saved up on the side for your emergency savings.
Yes.
You have a good idea what you're spending. Most of us don't.
No.
So
very true.
That really helps to have some. And there's a ton of like financial apps that you can get that will track your spending and tell you what you're spending by category. It's not to punish you. I'm not a big believer on, feeling bad about what you spend. It really is just for the knowledge, so that if you do see that you're a little crazy in something, you can say, I could probably not do that, or I could probably tone that down, just so you know where your money is going. Because I think so many times you get paid, or even if you get a larger sum of money and then you look back and you're like, no idea where that went, right?
Yeah, that'll happen all the time if you're not tracking it.
Yeah, but if you're tracking it and you have an idea what your basic expenses are, plus a couple dinners, plus seeing friends one night, plus a, movie or something, right? Building that in, and you know how much that is, well, then you know how much excess that you comfortably have, right? That you can put away. Or if you do get, a tax return or some money, you know how much you can put away before settling the things that you really need and, a little bit of want.
Yes.
Yeah.
Yeah, that's great information. Thank you so much. So we want to mention the website. It's wqcorp.com. And the phone number is 630-581-3580. And your office is here in, is it Oak Brook?
It's in Oak Brook, yeah.
Okay. But their Wealthquest is in other states as well, right?
Yeah, our main hub is in Ohio and Cincinnati, and we have another one in Naples, Florida. But we have clients all over the country.
Okay.
I think we have almost all states.
Really?
We have one or two missing. Yeah.
Yeah. Well, again, I want to thank you for your help, your advice
absolutely.
with Pete and I, our financial planning. You've been wonderful.
Good.
And it really has lightened a load for us.
Good.
Because it was something that was on our to-do list forever, and we finally reached out to you, and I advise people to start early, just even if you're not sure that this is something that you could do at 25 or 30.
Yeah.
Just ask.
Yeah.
Right?
That really is the thing. You want to start early. You want to just ask somebody. You may not have a lot, but you do want to make sure you're saving as much as you can, and you're using the right types of accounts, right? And once you're on that savings plan, you really can ride that out. And for a lot of people, the next step is it's just amounts of money that they don't feel comfortable trading or managing. I help family members all the time get started, and then the account might get a little bit bigger, and I'm like, I don't make I'm not making a $25,000, $50,000 trade, whatever. I kind of defer to like our trading team or a service they can use or something that makes those trades and does it in a smart way and kind of takes it off your hands from there. So it's just kind of it's a progression, right? You may not need full out planning for quite some time, but a good, kind kind of a progressive increase in complexity to your plan, you can kind of increase the tools as you move along.
Okay, wonderful. What, again, are the services that Wealthquest offers? I just want to kind of give a quick rundown of those services so that people understand it's just not the financial planning.
So it's everything under one roof is kind of how we say it. So it's tax preparation, preparing tax returns. It's the financial planning. It's the investment management.
Okay.
You have people pull their estate work together, getting that will and powers of
trust,
attorneys and trust together. And we also work with an insurance team that provides some kind of independent insurance advice there too. So
great.
Really is everything there. And depending on where you're at, you may or may not need all of that. And again, as a fiduciary, I'll tell you whether we're the best fit or whether someone else is the best fit and really get you into the right, where you should be.
Okay, wonderful. Is there anything else that you could think of that we may not have discussed yet that you'd like to bring up?
Well, I think there's so much available online today. Just take some time and read about it. There's a lot of really, free resources that you can use to get started. And a lot, like I said, a lot of apps you can use, and they're called robo-advisors, but money you can, open an account, you fund it, and they immediately invest it for you, right? Once they know your risk profile and time frame, so you don't have to figure these things out. Don't be afraid to try these things out, fee or no fee, right? Because it's, even with a fee, it's going to help you get further than kind of sitting around wondering what you should do. So read about it. And myself especially, I answer questions for friends and family members of clients all the time. Again, a good, fiduciary advisor would be happy to at least give you some advice, to help you get going.
Okay, wonderful. So again, the website is wqcorp.com.
Yes.
And I also am following Wealthquest on their Facebook page, which is Wealthquest Corporation. So you can go on to the Facebook page, check that out, or to their website.
Absolutely. And we have, different times speakers will come in or hold seminars, so you can click onto those and participate if you'd like. So there's a lot of good resources there.
Yes, and I get the newsletter. I think it's weekly, and it has a lot of great information.
Yeah.
I love it. I check out there. I think there's a podcast in there as well. The newsletter gives like blogs on information for investing and just things for families.
Yeah, and that's something, whether you're a client or not, you can have access to.
Yep. Awesome. Thank you.
You're welcome.
It's great having you here, Angie. I hope that the listeners will take some of this information and utilize it, especially if you just want to touch on financial planning. Like we mentioned, go to the website, go to the Facebook page, take a look at a lot of the information that's on there as well. It's been very helpful to me. And like I said, for me personally, finally getting a financial planner, I should have done it sooner when I was younger, but finally getting a financial planner helps me feel a little bit in control of what's coming up in the future.
Yeah.
Not a lot, but it is important to do that, very much like in real estate. When, you have a decision to rent or buy, well, here's a decision. Get a financial planner or not. And if you don't, at least dig into the information and learn some more about it so that you could get a leg up and learn it.
Yeah, absolutely.
Okay, thank you. Thank you very much for listening today. I hope you found this information valuable. If you have any questions about today's podcast or have suggestions for future podcasts, please reach out to me at 773-879-4855. You could find me on all social media platforms, Dalia the Realtor. I would love it if you would share this episode, follow me, and subscribe wherever you listen to the podcast. I'll see you at the next episode of Move Ahead with Dalia. Make it a great day. Thank you.